Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Tuesday, April 9th, 4:56 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in a short-term pullback situation. You can see the trend gauge over here. We've got leaders flagged as neutral with the green sub arrow. Couple more or more volatility with leadership today, looking for some support. Maybe the CPI will come in favorable tomorrow, and we'll see if that lights a fire under some of the early leaders that have been in pullback mode down to and below the 10-week/ 50-day moving average. As far as the short-term trend goes, Dow Jones Industrial Average has now closed 5 or 6 sessions below the 21-day, but we got the small caps and the Nasdaq 100 back above the 21-day moving average today. An undercut and reclaim of the S&P 500 and the mid caps are above also, so a mixed bag there with an uptick in volatility today. Uh, all five of the major indexes are above their medium-term 50-day moving average and long-term 200-day moving average. So what happened today? Nice gap up in the morning, but when you put a high in 5 minutes into the session, that's not what you want to see. We went sideways, maybe sideways to down for about 15 minutes, had one wave down, then right after 10:30, another two harsh waves down before putting in a bottom after 11 o'clock Eastern time. A little bit of a lunchtime bounce. Then we faded early afternoon. And then at 3 o'clock, one of the typically hawkish Fed heads, Raphael Bostic, made some dovish comments, and that's out of character for him. Maybe he got the CPI report early. But anyway, very strong bounce after 3 o'clock Eastern time and closed, still rallying into the highs, off of the highs made near the open, but certainly salvaged a good day and a lot of positive reversals in some leading names along with that. This is not the type of market that is conducive to position trading when you've got high volatility, shakeouts, the market on edge on every single utterance coming out of a Fed head or an economic report. So uh, you see what we've been doing in these videos. We've got it marked short-term pullback. We have two yellow arrows here under neutral instead of bullish. We've been pulling back, and it really started with the harsh sell-off last Thursday. Friday, we had a nice rebound, a tight day on Monday. Kick up in volatility today, however, and with CPI looming in the morning. Uh, we'll have to see what not only what the number is, but what the reaction to that is. And then on top of that, we've got long term, we've got 10-year and 30-year bond auctions over the next couple of days. We've got Fed minutes Wednesday afternoon at 2 o'clock, and then PPI Thursday before the open. So lots of cross currents coming out. We'll see how the market handles them. It hasn't really there've been software is something that's gotten our attention as that sold off over the last month, but has been showing some relative strength late last week and continuing Monday and Tuesday of this week. So that's something we'll keep an eye on, and that may be a case of some early leadership coming back. We're right on the brink of earnings season. It kicks off Friday morning with the big banks, and we'll see what all of the data coming out this week and the reaction to earnings, see how that carries the market. So here were the final numbers on the day. The big seven down an average of 0.23%. RG8 up 0.15. This is our 8 growth ETF composite. But the one item in there that kind of got our attention was FFTY. This is the IBD 50 leading names, down over 1% on the day, and that coincided with what we're seeing on our screens as well. So a little bit of a fly in the ointment there. S&P 500 gapped up 0.35%. As I said, put in the high within the first 5 minutes, was down over 0.8% before the strong rally into the close brought it back to green, up 0.14%, equal weight, even better, up 0.4%, NASDAQ 100 up 0.4, equal weight, NASDAQ 100 even better, up 0.64%. Dow just barely down. Mid caps up 0.11. Russell 2000 small caps up 1/3%. Global 60/40 stock bond up 0.21%. Bond prices strong all day, meaning yields pulled back. In-house GROTECTION, when your biggest holding is down 7% on the day, you're not going to outperform. And we had a couple of other leaders that we hold underperform as well. We stopped on a few things, added one name. You'll see what that is when we get to the tail of the tape. But GROTECTION down 0.6% today. Let's get over to the charts, and you can see for the third time in the last 4 sessions, the S&P 500 poked its head below the 21-day moving average. That's the green line. On Friday, reclaimed it. Today, reclaimed it as well. All of this, not sure it makes much difference as we need to see what the reaction is to the CPI and PPI numbers over the next couple of days, as the number of rate cuts that the Fed was thinking about, the market is pricing in fewer than that, or the odds are decreasing of those 3 cuts. But we'll take the undercut and reclaim today. Better than a sharp stick in the eye. NASDAQ 100 bounced at the 50-day, did close barely above, but back above 0.3% above the 21-day moving average. 4 sessions now, 5 sessions, right along within 0.3% of that number. And on to the Dow Jones Industrial Average, undercut, but closed right on the 50-day moving average. MDY mid caps, positive, finding resistance at that 550 level, but didn't even touch the 21-day today. That's some continued relative strength on mid caps. IWM small caps undercut but reclaimed and made a higher close versus its 21-day moving average. You can see this flat moving average is kind of acting like a volleyball net as price goes above and below, back and forth. And again, that's not conducive to position trading. We want a more firm uptrend, similar to what we saw back here in November and December. That was actually a very strong uptrend, but all this chopping in small caps has a lot to do with interest rates. So there's the 5 major indexes. On to the VIX. VIX, surprisingly lower on the day. I would have expected it to be higher with the harsh sell-off that we had, but it did pull back as the indexes rallied late. US dollar, week early, rallied a bit, closed in the upper third of the range, reclaiming the 21-day moving average and bouncing at the 50-day moving average. Gold, silver, and gold and silver stocks. Gold up 1.2%, continuing to make higher highs and high closes too. GDX, after a rough day yesterday, up 1.73%, and silver continues to rock up 1.3%. Bitcoin, after a strong day yesterday, gave most of it back, but is sitting on the 21-day moving average, down 4% on the day. On to bonds, broad bond index gapped up, stayed up 0.36%. Bond prices strong across the board. TLT up 0.93%. You know, if the prices are up, that means the yields are going to be down. TYX pulling back down 0.73%. That's the long bond, 30-year, and the TNX, the 10-year, down 0.27%. Probably get a reaction out of CPI to this chart tomorrow as well. All right, moving on to the tail of the tape from our inter-asset correlation. You can pause this. A little bit of improvement in the stochastics on the indexes and the RG8. As I mentioned, CPI and Fed minutes tomorrow, PPI on Thursday. Up 1 and a 1-day consolidation. Let's call it up 1 with a 2-day consolidation. Third straight close right around or within 0.1% within the 8-day moving average. Third close back above the 21 on the S&P 500. Expectations continue to be neutral with the chop we're seeing. As far as sectors go, gold, and silver stocks, cloud names strong. We'll be taking a deeper dive into this as we noticed that late last week and first 2 days of this week. XLRE real estate strong, regional bank strong, biotech strong. To the downside, Bitcoin, financials, industrials, and oil services. As far as the portfolio goes, Kava, week out of the gate, continued lower. We got stopped out on our full position. DFEN, we're going to have to switch to individual names from the enhanced ETF because Boeing is just too much of a drag on that sector. So we sold those two. We trimmed NVIDIA, our latest buy, NVIDIA, and we were underwater on that. So we blew that out as NVIDIA was selling off hard, and trimmed some SSO on the break of the 21-day moving average. When we started to rebound, I've been noticed talking about cloud stocks. We bought Net. It has been showing relative strength, and buyers came in. It hit high of the day when the market started to recover. So we did a starter position in that. Net, our Revere volatility adjusted beta dropped by about 20% from 1.23 to 0.97. We'll see what the reaction is to the economic numbers the rest of the week. And bottom line on the day, the gap up failed, 3 waves down, but a nice late bounce salvaged the day. All in all, I don't have it in green, although everything except the Dow closed green. I've got it in yellow, and CPI in the morning will tell the tale at least until Thursday. Fed minutes as well. Got to keep an eye on those. All right, so let's start off with here's Net. It's subtle, but the relative strength has been there, going sideways at a minimum, and then started last week, and then today you can see it's making a higher close. Remember, we mentioned that anything that's above Thursday's high is very clearly showing relative strength, as that was the shakeout day. Net is right at that level. This is a nice on lower volume bottoming base that it's putting in here. Got the 3 moving averages stacked up there, the 50-day, the 8-day, and the 21-day EMA. These are the types of things that this is about all we're comfortable buying in an environment like this, something that is right at support, is holding that support, and looking to move off of that support. So that's why we bought Net. Let's take a look at CLOU. This is Cloud Computing Index. You can see the relative strength there as well, coming off the bottom. Net looks better than this, but same situation after harsh sell-off here at the beginning of February. It started going sideways and putting in the bottom of this base. Let's also look at IGV. This is the software. This is big cap software, subtle relative strength this week on that as well. So that was the reason why we went ahead and added that. Let's show DFEN that we got stopped out on. You can see it undercutting the 21-day exponential moving average on heavy volume. And also Kava. This was just awful. We had a lot of high hopes for this. It was holding the 21, but today on heavy volume right out of the gate, no buyers coming in at all. Yeah, it held the 50-day, but it hit our stop, which was closer. It was the 21-day moving average minus 2%, and just blew through that, and we sold it down 7.18% on the day. Not a good. And this goes into what we've been seeing with retail names. It's carrying over to the restaurant sector as well. Look at Shack breaking the 21-day moving average today. Ralph Lauren, obviously not a restaurant, but I wanted to show some of these retail charts that have really been taken apart lately. Ralph Lauren, very obviously one. Lululemon on earnings a while back. Abercrombie and Fitch, which was a leader for a long time, breaking the 50-day moving average. PVH kicked it all off with that big warning and that gap down. And it's just been carrying over to a lot of other names in the sector. So we're avoiding retail for now. What else do we want to take a look at? Let's take a look at NVIDIA as we trimmed that latest buy that we did, which we were underwater on. And with the break of this 840-ish level, we closed back above it at 853, but small losses, you got to keep them small. This may form a bounce strongly off the 50-day moving average here if it gets to it, but this hasn't had any strength at all lately. As you can tell, the last couple of weeks, the relative strength has just been lacking on NVIDIA. And okay, Kava, DFEN, NVIDIA, SSO, that's it. FCX continues to be a champ, gapping up and holding the gap. Nugget continues to act fantastic also. We own that. That's really what carried the portfolio today. Uber was weak early, but had a decent comeback, still below the 50-day moving average, but closing at the top of the range. Another disappointment today was Eli Lilly, breaking the 21-day moving average, but bouncing where you need it to at the 50-day moving average. Dell has been weak as well, but closed at the 8, bouncing off the 120 level. In fact, the three main infrastructure plays have been mildly weak lately. There's VRT, although it down 1.4%, although it did bounce at the 8 again today, and SMCI. Look at the relative weakness here. Although, I mean, it had a ridiculous run, but here we are. Nice line in the sand here, actually, to trade against would be today's low, right at the 50-day moving average. Let's take a look at a couple of other AI network and data structure type names. Nutanix pulled back 2% today, but bounced at the 8-day exponential moving average. ANET, another one down, undercut, but reclaimed the 21-day moving average. I mean, some of these looking pretty good. Really, it's just retail lately that has been taken apart over the last week and a half. What other names do we want to take a look at here? Here's another retail name breaking the 50-day moving average. That's Deckers. They just really decided to sell them over the last week and a half since that PVH earnings report. Another one that we're keeping our eye on that's acting well and showing relative strength is ServiceNow, bouncing near this 50-day moving average. So some good stuff there, but we'll be pouring over the software sector as that's been showing some relative strength, as I mentioned. And with that, we're going to wrap it. Something new I want to talk about. Coming soon to you is another program from the team at Revere. Ted and Connor are going to start doing a weekend Sunday study session, and we're in dress rehearsals for that right now. And over the next couple of weeks, that's going to start being a thing. Sunday is the only day we don't put out content, but that gap is going to be filled by Ted and Connor. And again, this is one of the things that differentiates us from the traditional pie chart advisor nightly videos explaining what we're seeing and what we're doing. That's what you get here at Revere. And our followers have taken off to the upside. I tell you what, I'd have Ted and Connor manage my money before any pie chart. Stay in there, hang in there, guy, at any time. And, you know, it's back to what William O'Neill said. Anybody can get you in. Who's going to get you out? You got to be able to take a technical look at the market and avoid big losses, especially if you're heading into retirement. Now's the time when you want to move your money to Revere. We've got a dual mandate. We participate in market uptrends, get out of the way during market downtrends. It's, you know, 130% harsh loss can just devastate a big nest egg. I mean, can you imagine you built your nest egg up to $2 million, you're getting ready to go in, and you get a 30% drawdown going right into retirement, and your 2 million is down to 1.4 million. That's some significant money that we're talking about. And that's what we avoid. That's our mandate at Revere, is to protect capital. You protect capital, the gains take care of themselves when the market is in a healthy state. With that, I'm going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. That's 855-732-5932. If you're interested in becoming a client, my partner, Dan Stewart, can be reached at dan@revereasset.com. And with that, I'll wrap up the video for Tuesday, April 9th. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.